friends, and welcome to the Market Life Market Review for Friday, March 15th, 2019. So this is a quadruple witching day. What that means is that basically a lot of products expire. People think, and it's a little bit difficult to prove from a quantitative perspective, but people think that this means indexes and actually kind of all products are subject to distortions. Now, there's no doubt that we do sometimes see this in individual stocks. And the types of distortions that we're talking about are basically what you would call defending a strike price. You will see, we wonder if markets are manipulated. Well, here's a clear way that they are sometimes. You will see that the market, particularly if you have a strike price that has a lot of options open interest, that the market makers and people who would hold positions could be incentivized to push the stock around. And it really doesn't take quite as much buying power as you would think to do that. And of course, sometimes they lose. But what this does lead to is, particularly if you're a very short-term trader, it's not our focus here, but it was part of my life for many, many years. Particularly if you're a short-term trader, you will see some weirdness. Now, my thinking is, and a lot of people disagree with this, but coming from the perspective where I saw this a lot as a short-term trader, I think if you are not a short-term trader, this is really not so important. And a lot of people like to talk about it because it's kind of exciting and it's something interesting to talk about. The argument is like, will you see strikes defended on the SPX, on the indexes, and not enough to really shape your investment strategy, I don't think. So just be aware of it. You're going to hear some people talking about it probably, and you should be aware just in terms of general market education, what's going on. Well, in terms of, with that segue, what is going on? I think the hourly S&P that you see in your report is probably the best indication. And this is not too hard to read, right? So you have some kind of upswing here, you have a downswing, and then you have another upswing, and critically, a little consolidation. Now, there's a very good chance that what I've completed here is going to be the outcome. Another way to think about this, if you don't like my random freehand lines, let's draw some kind of level, and really probably should be from there. And then you can see some variation of cup and handle, right? This is one of those, even though this is a cup and handle, I don't believe is Edwards and McGee, but it's certainly been in the chart readers' vocabulary for a long, long time. And it's a pattern that's important because it shows a lack of price rejection. What makes a level work? Well, what makes a level work? Okay, it's right here so imagine that we're like all of this is future. We don't know about any of this, okay? So you come up to this anticipated possible resistance level, which you have seen, you've had previous touches. Here's a previous resistance level. We'll come back to that in a moment. But let's look at this touch. And what happens? Boom, price rejection right to the lower Keltner channel. And then what does that set off in the future? A decent little sell-off. So the price rejection is what shows you the level is most likely to hold. This, look here, failure of price rejection. That's how I read that. What's this? Failure of price rejection. Now, it doesn't even need to be said. It's funny when people say that. They usually say, should I just leave it hanging, ... No, it doesn't need to be said that, of course, nothing works all the time. But this is a bullish setup in the market. I wonder